So whether you've been trading for a while now or you are completely new to trading, you should know that understanding market structure is very important. So in this video, we'll be explaining more about market structure, breakout structures, and market structure shifts in its simplest form. We'll also talk about how price creates highs and lows, how to identify important levels, and what these breaks may tell us about the markets. And just make sure that by the end of this video you'll be able to know, or you should have a clear idea of how to find these patterns by yourself on your own charts. So let's get straight into it. So let's first talk about market structure, right? So price moves up and down, creating highs and lows, right? So by studying these price highs and lows, we can get an idea of whether price is moving up or it's moving down or it wants to change direction, right? So there are actually four main types of price movement. We have the higher highs. I'll make it a bit big so that everyone can see it clear, and the text make it like a bit black. So you have higher highs, higher lows, lower highs, and lower lows. So these are the four main types of price movements that we will be dealing with, right? So let's talk about the higher highs and the higher lows. So a typical higher high is formed when price breaks the previous high. So if you have highs like a high like this, let me look at my drawings. So if you have a high, if you have highs, a high like this, right? And then price breaks this previous high that was formed here. We call this high here a higher high, right? And a higher low is formed when price pulls back and stays above the previous low. And you know the previous low is this low, right? So far as price doesn't break this previous low and it's still above the previous low here, we can classify this as a higher low, right? So the next higher high will be formed when price breaks this previous high that was formed here, giving us a signal that we are going up. So when price keeps creating the higher highs and the higher lows, right? When price keeps creating these higher highs and the higher lows, the higher high, the higher low, the higher high, the higher low, we generally term that as a bullish market. We see price is moving up, right? It's going to the upside, right? So in simple terms, you are trying to see price moves up and then it pulls back and holds above the previous low that was formed and then moves up again, right? That's the simplest term I can ever use to explain a bullish trend, right? So for lower lows to be formed, or for a lower low to be formed, it's the same idea, just in the other direction, right? So lower low is formed when we have a low here and we have this low being lower than the previous low that was formed initially, right? So if a low is formed below this low that was previously formed here, we term this as a lower low, right? And lower high is formed when price pulls back and does not reach the previous high that was formed here, right? Hence making this high that will be formed lower as compared to the high that was previously created here, right? So far as we haven't broken this high that was formed, it makes this low lower comparing it to this high. So that is a lower low, right? And then the trend continues by breaking the previous low that was formed, making this a lower high, making this a lower low. So then it pulls back again and it doesn't break the high that was previously formed here, right? So it makes this high that was formed here a lower high. So generally when price creates lower lows, so let me use another one. So generally when price creates lower lows, lower lows and lower highs, lower lows and lower highs, lower lows and lower highs, we call this a bearish trend, right? So in this case, price moves down and the pullback that happens fails to move above the previous high that was formed, right? And then it moves down again. So that's what a typical bearish trend looks like, right? So by now you should know that a bearish trend means we are going down, and a bullish trend means we are trading to the upside or we are going to the upside. So using these illustrations, let me do the bullish illustration and the bearish illustration. This for the bearish illustration, so let me do the bullish illustration. So you have higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, right? So this is a bearish illustration, change it, and this is a bullish illustration, right? So we're going to talk about significant price points, right? So significant highs and lows are price points that stands out on the chart, right, and have influence, or they've caused influence in the market, right? So I mostly call them the turning points in price, right? So you realize that when price got to this place, what do we see? Price turned, and then there was a significant move from here, right? And then it got here. We also had a significant move from here to the downside. Also got here. What do we have? We have a significant move to the upside, right? So that's what I call my significant highs and lows, right? Because they are the turning point in price. Okay, so that's the same thing. The same thing or the same idea used here. We have price creating this high, and then what happens? Then we come low here. So that is my significant high. So this is what I term as my significant highs, using the highs here, and the significant lows using the lows here, significant highs using the highs here, and significant lows using the lows here, right? So a high can cause price to move down strongly, right? And that high is very important than a normal regular high that was just formed in price, right? So there are priorities, or there are levels of significance to highs and lows being formed in the market, right? So the same thing applies for both of them. I did an illustration using this one, so that's the same thing being applied on this one, right, on the bullish trend. So let me just do a short demo on the chart so that we can get used to it, right? So you realize that we have this being the last lower high that was formed, right, before we had the push to the downside here, right? So this is my significant point, right? And I realized that this lower low that was formed here, let me get it right. So this lower low that was formed here was what caused price to move, right? So in the earlier illustration I made here, I told you the significant highs and lows is what I term as my turning points. So realize that this was the turning point in price. This is what actually caused the retracement, or this is what caused price to create a lower high, right, for price to break down and also cause lower low. So realize that price broke down, caused the lower low here, let me use this one, caused the lower low here. That's what a significant point for me, because it caused a swing point. It caused the turning point in price for price to create another lower high, and then create another lower low here, and then eventually go into the upside, right? So I guess that one explains any question that someone will probably have in their minds right now. So now let's talk about break of structures, or BOS, right? That's the shortened form. So a break of structure happens when price breaks an important high, right? So in a bullish trend, we know we have higher highs and higher lows. So a break of structure happens when price breaks a price or it breaks an important high that's being the higher high that was formed here, right, in the same direction of that current trend. So in this direction that we are, let's say we're in an uptrend, right? If price breaks the previous high or it breaks an important high in a bullish trend, we call that a break of structure, right? So we mark this as our break of structure. So this will be our first break of structure, this will be our second break of structure, right? So as long as we keep breaking, coming, creating lower highs and creating higher lows and higher highs, higher lows and higher highs, we have price breaking all of them, breaking the important highs, right? The important highs being the higher highs that are formed. So if price breaks those important highs, we call that a break of structure. So that's for a bullish trend. So let's talk about the bearish trend. The bearish trend is just the same thing, just in the opposite direction. So if you have price creating lower lows and lower highs, lower lows, lower highs, lower lows and lower highs, lower lows and lower highs, as long as price keeps breaking the lows or the important lows that was previously formed, right, we call that a break of structure. So realize price broke this low here, then created this low, retraced, created a lower high, and then what do we see here? We see another break to the downside. So that break to the downside is what we call a break of structure, right? So in other words, break of structures simply suggest continuations, right? So realize that since we were in a bullish trend and price kept breaking the important highs, that's the higher highs that were being formed, we term that as price continuing the trend to the upside. That's the same thing for the bearish trend, right? So a break of structure just suggests that price wants to continue the intended direction that is already moving in. So you can also see it this way, that since price keeps breaking the highs, the higher highs that are being formed, right, you can see that it shows buyers may still be in control of the markets, right, and they want to continue the move to the upside, or they want to continue the bullish momentum, right? That's the same for this downtrend, that sellers may still be in control of the market and they want to continue the bearish move to the downside. So using the charts to get more examples or typical examples of how the break of structures are going to look like on the charts, right? We have price creating this significant low here, right, and then creating a lower high. Mind you, this high here is lower as compared to the high that was formed here, right? So it makes this high here a lower high. And then what do we see? We see price breaking the significant low that formed the lower high, and this suggests that they want to keep pushing price to the downside, or they want to keep giving sell momentum to the downside, right? So that's the same thing we have here. We have price, this is also a significant move or a significant point, right? This is a significant low that caused a lower high here. Mind you, this high is lower as compared to the high created here and the high created here, right? That's what we call this a lower high. And what do we see? We see price breaking the low here, giving us a signal that they want to keep pushing price to the downside, right? That's the same thing they do here. We have this significant low here, and then we have this high here being our lower high. Why do we see that? It's the same idea, the same analogy, that it doesn't surpass the previous high that was formed here, making this a lower high, and also breaking the significant low that was formed here, showing us that they want to continue going down, right? So that's for a bearish trend. So that's the bullish trend also stays the same way, just in opposite direction, right? So we have price also creating a significant point here. This is a significant point for me, and we have, so this would be our higher high, right? And this would be our higher low. Why do we say that? We see this is our higher low because this low is higher as compared to the previous low that was formed here, right? So this being our significant points, we're expecting that price will break the significant high here to show us that there are still buyers in the market and they want to continue the buying momentum to the upside, right? So realize that this, after the pushing price to the upside, you realize that it created another significant high here, right? So this high is significant because that was where price turned. So as I've already explained, I said that's the turning point in price, right? And then we have this low to be our significant low here. So far as price hasn't broken its low, we are still expecting that they would continue pushing price to the upside, right? And what do you see? You see price push it to the upside and breaking this significant high that was created here. So this just shows you that they want to continue the trend. So I'm guessing that you understand the bearish idea and the bullish idea. So now let's talk about the market structure shifts, right? Or the MSS as it's shortened to. So market structure shift happens when price breaks an important level against the current market direction, right? So let's do a short demonstration of how it looks like. So let's say we are in a bullish trend, right? We are creating higher highs and higher lows, higher highs and higher lows, right? So it's not really perfect, but let's just use it that way. So you realize that this is our important high or significant high, and this is our what? Our significant low, right? So this is our higher high and this is our higher low. So this move signals or shows us that we want to continue the trend to the upside, right? But the moment price breaks this important low here, this shows us that they want to change the direction that they are already moving in, and that's what we call our market structure shift. So this thing happening here, or we having price breaking this important low, can just give us an early sign of a potential reversal to the downside, right? And by potential reversal, I mean markets may be preparing to change direction from the bullish trend to the bearish trend, right? Or if it was in a bearish trend, it would tend to signal you that they want to change from the bearish trend to the bullish trend, right? So if price breaks this low, it doesn't really guarantee that market is going to reverse, right? So you need extra confirmations to show you that the level that they broke here, or the importance level they broke to change the direction, was indeed an important level that they broke, and you will need more confirmations to know if they want to actually reverse or it was just a fake out and they still want to continue the trend to the upside. So the thing is, it doesn't guarantee, and I repeat, it doesn't guarantee that the markets will reverse, right? But it can be an early warning that the markets wants to start moving in a different direction, right? So this is for a bullish trend. Let me just do a short demo on the bearish trend, and we go to the charts to get more examples. So let's say we have lower highs, a lower low and a lower high, lower low and a lower high, lower low and a lower high, lower low, and then price breaks this important high here. Remember, this high here is our lower high, right? Which means it's the turning point in price to break this low here. Okay, so this makes this high an important high. So the moment price breaks this important high, we are seeing this as our market structure shift, and then we are anticipating that price will change direction and continue or start moving to the upside, right? So that's the bearish scenario, and I've already explained the bullish scenario. So let's just go to the chart and get some practical works to do. So using the example we've already explained, right, we already realized that this was a bearish trend, that we had series of lower lows and lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, right? But we didn't break the low here. We not breaking this low here and later on coming to break the important high, or breaking this lower high that was formed here, is a signal for us to change our direction, or it's an early signal that markets wants to change the direction and they are intending to push price to the upside. And what do we see? We see that price continues to the downside and then breaks this important high, and then what do we see? We see a reversal and price creates higher highs and higher lows, higher highs and higher lows. And what is that signaling? That's showing you that price has changed the direction from the bearish trend to the bullish trend. So using the bullish trend as well, so that you get a fair understanding of what it looks like on both sides. Look, using the bullish trend, you can see we have a higher high being formed here and a higher low being formed here. You have another higher high being formed here, and what a higher low being formed here, right? So this is our higher low that we're expecting that market shouldn't break this low. We're expecting price to continue breaking a high to show us that they are indeed pushing price to the upside. But what do you see? We don't see price closing above, or we don't see price breaking. My tool is not working, so we don't see price breaking above this higher high or this important level. But what do we see? We see price rejecting off that important level. Then we later on see price breaking this important low. Mind you, this low is our higher low, right? So price breaking this important level here is a signal, or it's an early signal that they want to reverse the trend. And what do you see? We see that price, after breaking this low, keeps on creating lower highs and lower lows, lower highs, lower lows, and therefore changing the direction from a bullish trend to a bearish trend. So let's just do a short recap on what we just did today. So we explained that a bullish structure consists of higher highs and higher lows, higher highs and higher lows, and then a bearish structure consists of lower lows and lower highs, lower lows and lower highs. So a bullish structure is when we are going up, and a bearish structure is when we are going down, right? And significant highs and lows are, for me, the turning points in price, or is an important price point that has strongly affected the market, right? So you can realize that this price points affected the markets towards to retrace or to create the lower high, and then what do we see? We see another turning point here, or this significant point affecting the markets to go to the upside, and then we get a break to the downside. So the break of structure, as I've already explained, is when price wants to continue the trend, right? So when it keeps breaking important lows in that particular direction. So when we see price breaking this lows here, when we see price breaking this low here and breaking this low here, that's what we term as a break of structure. That's when we are breaking the important lows or highs in the direction that's already moving in, right? And the market structure shift is when we break important lows or highs in the opposite direction of what the market was already trading in. So realize that price in this example was going low, so you have lower lows and lower highs, lower lows, lower lows, and we have a lower high here that we don't expect to be broken, and then price breaks this lower high here, giving us a signal that they want to change their direction to push price to the upside, right? So you should know that. So a simple way for you to know or remember the break of structure and the market structure shift is that the break of structure gives you a signal of continuation, and the market structure shift shows you a signal of a trend reversal, or they trying to change the direction of the trend that they are moving in. So go back and look for examples on break of structures and market structure shifts using your charts. So just focus on important highs and lows and not every price movement in price. Hope you found this video insightful, and until next time, be safe.